Happy Monday, everyone. Thank you for joining our monthly portfolio review and Q&A session. Today, we're going to go over the results of the last month, so the month of January so far, and also what we are watching out for in the year 2026 ahead. We are coming out of a pretty interesting week. Last week, there was some fear and anxiety around tariffs coming back again between the US and Europe in a bad way as a result of the conflict over Greenland. And that affected markets. Towards the end of the week, there was some kind of a deal and the markets recovered somewhat, but we're still a little bit on the light fear side, I would say, so far this week. We'll see how this week goes. We have all kinds of earnings reports coming up, so it should be interesting to see where we go from here. But let's dive in. Let's look at what happened this month so far, and then also look at some details and some trades. Before we look at the details, just a risk disclaimer here. This is for educational and informational purposes only. There's no financial advice or professional advice given here. I recommend you always do your own research and keep in mind investment involves significant risk, and past returns are not indicative of future results. All right, so let's dive in. We are taking a look at a trade that it kind of symbolizes how the performance did on the trade on Rivian, which is an electric car company. And you see how option selling can kind of help you get consistent returns. The first column, the cash column, you see how much cash you have in each month, and then with the premium that you collect from selling options, just with a ROI of 3.46% on a monthly basis, you're kind of getting an annual return on investment of 41%, 41.5%, and with compounding that actually goes up to 50% if you reinvest the gains along the way. That's the main strategy we use in the portfolio, option selling. So this kind of visualizes the potential there. And this graph shows how our Roth portfolio, the main portfolio that we share in our school community, performed over the past month. So the balance went up moderately, I would say, 6.18%. There was a little bit of a correction towards the end of the year. There was a bit of a risk-off move. Crypto assets went down a good bit, and some of the tech companies corrected as well. And this month we saw more of a recovery, which also reflects in our portfolio. So right now, things are looking pretty good. You can also see we have some buying power right now, $1,800, that we're looking to deploy this week to collect some more premium. Okay, and we're looking under the hood a little bit. What kind of transactions did we do this month to help with this return? You can see that we sold a number of calls, mostly on Riot. And then we also rolled some of these calls towards the end of the month. And when we are rolling, we're usually rolling the price into the future and also higher. If we look at an example here, there was a call sold with an expiration of February the 6th. We collected $115 almost in premium. And then on the 8th, we kind of rolled this call further out, actually 3 of them. We sold them at different times, 3 Riot calls, and then all 3 were rolled on the 20th of January to a higher strike price, $19. The earlier strike was at $17. Actually, it's a variety of different ones, it looks like. But we rolled all of them up to $19 for a small credit, or $53.75, and kind of captured additional premium along the way. Looks like, add that back real quick. Okay, looks like it's good now. Yeah, so that is the week. The other thing that's kind of interesting to call out is we sold a put on Mara, actually 2 of them, which is Marathon, a crypto mining company. And since we had gained a lot in the price from the time we sold it, we closed this put early for a loss of $34. But that unlocked the cash that this put secured that we had sold in the last year, and kind of allowed us to deploy this cash for other purposes in the future and kind of collect more premium. So it can make sense to close a position early if most of the premium is already collected, so that you can increase the capital efficiency in your portfolio. And then another unique thing is TSLL1, you see in column A here. And that's actually the result of a conversion where this leveraged ETF on Tesla paid out a dividend. I think it was in December of last year, and then all options that we had bought and sold on that ticker, they were kind of converted into the TSLL1 type of stock, because the value shifted because of the underlying payout. And we had a long call for that one, and we closed it on the 16th of January for a small profit of $135. That reflects about 20%, a little over 20% return on investment from the time we bought it. So still a decent return, but yeah, could have been higher. There are a lot of other calls that we closed last year on TSLL that had significantly higher premium, and this was kind of one that ran a little longer. And we have more open ones as well. And actually, on the 16th, we sold a put on TSLL as well, because the price had dropped some. So we'll see how that performs this week when Tesla comes out with their earnings. Both Tesla, Meta, and some other interesting companies have earnings this week, so it's packed. We expect some good movements in the market, and there will be opportunities for both puts and calls and rolling and spreads and all that good stuff. Okay, and whenever you have any questions about this, feel free to leave them in the comments, or join us live in the community for the Zoom call at saltmoneyoptions.com. Let me, yeah, I'll just dive in here into the next one. This one, I think I'm going to skip. So this is the, let's see, yeah. We actually bought another TSLL call this month as well, with expiration into the next year. We chose a strike price of $18, limit price $585, so $585 investment. We got 2 of them. That's kind of a leap investment, long-term equity appreciation position. And we are expecting the price of TSLL go up significantly. We most likely will not hold it exactly till expiration, but closer to expiration, when we see this stock at a good value, then we'll probably close this out for hopefully a good profit if everything goes well with the company over the year. And then we also sold a put credit spread on American Airlines. The upper strike price that we sold was $14.50. And then the lower one we bought $13.50. So we had a risk of $100 per option. And we sold 20 of these, which makes it a total risk of $2,000. And of course, if you don't do spreads yet, or you prefer to just sell puts outright, you can ignore the bottom part and just collect the premium from American Airlines on this upper put and kind of simplify that. So that's one of the other trades we did, and we'll monitor and send updates in our community throughout the month. This kind of summarizes the post in our community about this American Airlines put spread or put that we sold. And also one call out in this update that we sent to our community was we had recently developed an educational stock market simulation app called optiontunity.com, where you can test different option strategies, see how they perform in different market scenarios, and then also compare your results with your friends that you can invite to compete with you on the leaderboard. So it's kind of a fun learning game. It has both content to make your investment strategy better over time and also unlock new features in the app. And then also the game or rewards effect to building a portfolio. You can choose if you want to start it with $10,000, $100,000, or $1 million, and kind of simulate an environment that is either realistic for where you're at with your portfolio, or you can simulate how you would trade differently if you had a different size. That's all possible with this stock market app, and I encourage you to check it out at optiontunity.com. Yeah, this is actually an older trade. We can skip that one for this session, this one as well. I just wanted to share the training content we have in our community. So we have the option selling bootcamp that goes over all the basics of the strategy we use to generate consistent returns in your portfolio, to reduce the cost basis and also create cash flow from the positions you have. And then we have a more advanced training here on how to roll, when to roll, what rolling is. That covers one of the main strategies we use to improve returns after the initial transaction has been made, and then also to manage risk. If the market moves against you, you can actually use rolling to even turn a losing trade into a winning trade. Sometimes it's not always the right choice. Sometimes it's just better to take the loss and move on to the next trade. But oftentimes I've been able to turn a loser into a winner without increasing the risk significantly. And that improved the returns a good bit over the long term. And you also have the opportunity to always schedule a one-on-one coaching call at your convenience and get it at a discount. So that's all part of our community offering. This is an inside view of what the option selling bootcamp looks like with the different topics, training content, video, and the resources. I encourage you to check it out at saltmoneyoptions.com. We look forward to helping you improve your investment journey and take your results to the next level. Okay, that's it for this month. We're gonna hop over to the Q&A session on Zoom now. If you haven't joined yet, you can do that at this URL. Or if you're already at a place where you want to take on the more advanced trades, maybe you have a portfolio over 100 grand, and you want to learn advanced strategies to take your return on investment beyond 50% and with a risk-managed strategy setup, then you're welcome to join us at stockoptionpros.com. This is for larger portfolios, people with more strategic investment goals. All right, thank you so much for joining, and I'll see you over at the Zoom at saltmoneyoptions.com.